Good morning, ladies and gentlemen. Good morning. I do hope you can hear me and can see my screen. If you can, please type in hi in the comment section. This will give me a feedback that we are good to go this morning. I would like to see some feedback, please. If you can see my screen and you can hear my voice clearly, kindly type in hi in the comment section. Okay, so what do we have here? Valeric, good morning to you, Valeric. 0475, good morning to you. 276, good morning, thank you. Hey Carrie, how are you doing this morning? Carrie, good morning to you, and glad to have you around with us this morning. On this note, I welcome you all to yet another promising session on the X Trend Speed Live. My name is Sheriff Daramola, and for the next 1 hour I'm going to be your host as we are going to be evaluating the financial market in anticipation of the New York session today. So we are going to be looking at the market from a technical standpoint to identify potential trading opportunities, as well as managing our existing trades as we get prepared for the New York session. And for those who are joining us for the first time, you are welcome on board. I'm so happy to have you guys around. If you can notify, just let me know right in the comment section if you are new with us. So what we simply do here is to gather here on a daily basis to analyze the market in anticipation of the New York session. And on Mondays we do have series of instruments we have randomly chosen, and this will be the basis upon which our follow-ups will be throughout the course of the week. So if you had been with us on Monday, if you had given us an instrument to look at, we shall definitely be monitoring this instrument together for the rest of the week. So once again, you are highly welcome. And with that being said here, let's dive right into the business for today. I can see your comment 51276. Good morning. Thank you very much. So as usual, the first thing we do here is to keep tabs with the fundamentals of the market. And we want to be going into the economic calendar to see what majority in the market are looking forward to today. And what we do focus on are high impact events that will be affecting the pairs that we are monitoring for the week. And for this week, we are going to be looking at high impact event for pairs like the US dollar, the Japanese yen, and the pound sterling. And for Tuesday, May 9, we do not have any high impact macroeconomic event to look out for. Because of this, what I did was to go the extra mile of readjusting my filter to include the medium impact event, and this brought in a couple of events from the US docket. So we have Jefferson's speech, which is coming up in about an hour 30 minutes from now. So Jefferson is a member of the Board of Governors of the Federal Reserve. So he's going to be having a speech in an hour 30 minutes from now, which definitely everyone will be looking forward to. And then we also have William's speech coming up in about 6 hours from now. And William is the president of Federal Reserve Bank of New York. So he's also going to be having a speech, and you all know definitely whatever these guys say here will have an impact in the market, and it will also give us an insight into the monetary policy and the economic situation of the US economy. So these are events that majority will also want to be looking at in the absence of high impact macroeconomic events, and we shall definitely be seeing the anticipation of this event reflect on the chart as price action. So with that being said, here we are going to be diving right into the chart, the live chart, to analyze. And the first commodity we are going to be looking at this morning is the US oil. And on the US oil yesterday, I informed us here that I was in a buy position, and I rode the move all the way from the $72 area, which was where when price action broke out of that structure we identified as our key level on the daily time frame, and price action moved about 150 pips move in that direction. And one thing I told us all here yesterday, if you recall vividly, was that we are at a critical point in the market around that area, and the reason is because of the fact that price action was trading around the resistant line of that descending channel we identified on the 4 hours time frame, making it a very important confluence where we might likely be seeing either a breakout of that structure for buying opportunity, or we could see price continue to reject that level, giving us signs that sellers are still very strong in the market to incite a bearish move. And for the sake of clarity, and for those who are not part of our live session yesterday, let's quickly run through the 4 hours time frame to see what we saw at the beginning of the week that made us to consider the importance of that structure around the resistant line of that descending channel. So let me delete this one. I don't want it to show on the higher time frame so that we can have a clean chart. Hold on a second. I'll be done with this in a moment. All right, I think we are good now. So if we go into the 4 hours time frame, beautiful. So this is what we were able to cite here yesterday on the 4 hours time frame, and we went to as far back as considering the activities of price action since the beginning of the month of April. And if you look at the structure closely, you will see how price action had transitioned into what looks like a descending channel, which further emphasize the strength of the sellers in this market. As you can see, price are consistently found lower highs in this market, giving us this resistant line of that descending channel, which you can see on your screen. Now, yesterday, price action came into the trend line. So let's zoom in to see how important the current structure is here. So we can see our price action after testing the resistant line here at around the $73.25 level. We saw our price action transitioned into a consolidation phase, which emphasized the level of indecision at that particular point in the market. And with this whole situation we have here, it is quite obvious that majority were not sure if price will be continuing to the upside or not, and as a result we had this whole choppy situation here. So there are two possibilities that could happen around this area, which we deliberated on yesterday, and one of the situation here is the potentials of price action breaking out of the resistant line to incite a bullish momentum to the upside. So if price action breaks out of that resistant line of the descending channel, then at that point we have a signal that that line may no longer have the strength or capacity to negate any bullish momentum at that point. Then the other scenario, which was very much obvious, which is much expected considering the long-term bearish momentum in this market, was that price action will continue to reject the trend line. Continued selling pressure on our lower time frame will give confirmations that sellers are still strong in the market, which might likely incite another sell-off back into the support line of the descending channel, or probably come back into that key level at the $70 area, where it will now turn out to be a retracement of this impulsive move that started last week to incite another wave of bullish momentum. So these were the scenarios that we were looking at during the live session yesterday, just right around that resistant line here. So if we now scale back down into the 1 hour time frame, you will now see why this whole situation was concluded on. Now look at the setup we have here on the 1 hour time frame. So I now have a new resistant line, being the fact that this is the highest point price action has been for this week. That is the $73.25 area, and we can see that as soon as price tested that area, which coincidentally shares a confluence with the resistant line of that descending channel, we saw our price action transitioned into what looked like a reversal pattern in the form of a double top structure. And you all know what we do whenever we have a potential reversal pattern like this. The next thing we want to be doing is to identify the neckline of that reversal pattern, which shares a confluence with that $72.60 level. And for the reversal pattern to be valid, we need price action to break down the neckline area at the $72.60 level, which happened during the early hours of today, which personally triggered a sell position for me. With the whole situation here, you all know what we look out for. Price action breaking down a key structure like this, there is still a likelihood that price action will come back, retest the structure to incite a trend continuation to the downside. So at this point in time, as we head into the New York session today, it is very important that we keep the potential of sellers on the high scale of preference in this market. So as long as price action remains below the trend line and the $72.60 level, we continue to look out for selling opportunities in this market. So we have two key structures that will be guiding our bearish momentum in this market. The first one is this trend line, which happens to be the resistant line of that descending channel we identified on the 4 hours time frame. So that is one. And then the other one is the $72.60 level, which happens to be the neckline of that reversal pattern that we identified earlier. So as long as price action remain below both of the structure, we shall feel comfortable in our sell position. And we'll be looking out for more opportunities to sell if price action goes on to break down the $72 area, break down the $71 level as well. We look out for more opportunities in this market. So this is how we are going to be selling the US oil for today. So we continue to look out for more selling opportunities below that structures, and this whole sell setup here has a potential of giving us multiple entries in this market if we can be on standby to catch these moves. So in as much as we're looking out for selling opportunities in this market, we should not ignore the potentials of buyers too as well. And if we consider what has been happening since last week, that is on Thursday stroke Friday of the previous week, you would agree with me that price action has been on the bullish side. And look at what we saw here on Thursday and Friday. We saw this whole reversal pattern come into play after price action tested the $67.50 area. We saw something like a double bottom structure, which is a confirmation that buyers are probably getting ready to incite a reversal setup in this market. And with a neckline around that $70 area, we saw the breakout of the structure to give us the potentials of buyers inciting a bullish momentum at this particular point in time. Now, with the breakout of the neckline here at the $70 area, and with the potentials of sellers around that resistant line since the beginning of today, we might likely see a sell-off in this market, which will be considered to be a retracement of this impulsive move that started on Friday into the structure. So we might likely see price action do a retracement back into the $70 area, which also shares a confluence with that trend line that you can see here, where the appearance of buy pressure around the structure will be inciting another wave of bullish momentum. So let's see how far this retracement phase is going to go. So the maximum area we want our TP target for any sell momentum here is going to be the $70 area. Now, going back to the bullish expectation in this market. So there is one thing, looking out for price action to drop into the structure before a bullish momentum happens. And remember, we also have structures around the $72 area, which price action could also come into before another wave of bullish momentum happen. Then we also have these areas too. So we want to keep tabs with all the structures. Why? If we are in a sell position, we want to keep tabs with the structures to see how price action reacts to that level to catch the bullish momentum early enough. However, one interesting thing about the structure is that if at any point in time price action breaks out of the resistant line of that descending channel we identified on the 4 hours time frame, then at this point we want to be seeing this as a signal that we could be having a momentum shift anytime soon. And remember, we are not going to be getting too excited, as we need some confirmations to happen before we join that bullish momentum. So we shall be scaling down into our lower time frame, like the 15, 10 or 5 minutes time frame, to look out for retest of structure, confirming that buyers are strong and sellers are finding it difficult to drop back below the trend line. Then at this point we want to be in for a bullish momentum. And remember, we also have a structure here at the $73.25 level, where a breakout of that level will definitely give us more opportunities to add more position to our existing trade. So these are my views here on the US oil spot for today. But in generally speaking, I'm tending towards a bearish momentum here, as we've been seeing selling pressure right below the trend line, giving us a clue that buyers are finding it difficult to break out of the resistant line of that descending channel. So we might likely see a situation where price will respect it one more time to bring a sell-off in this market. So I'm tending towards a bearish momentum, but just in case price action breaks out of that resistant line, we want to be on standby to catch the bullish momentum here at the site of buy pressure at a retest of structure on our lower time frame. So let's keep this in mind. So it's more bearish at this point, but if the contrary happens in such a way that price breaks out of the trend line, then we want to be getting ready to sell, to buy rather. So we have a key structure here which we shall be using to guide our trading activity for today, and these are the trend line. That is the first one. So as long as price remain below the trend line, we feel comfortable in our sell position, but if it breaks out, retests that structure, we get ready to buy. Then the second structure here is the neckline that we identified at the $72.60 area, where a breakout to the upside would have broken out of the trend line, negating the strength of the sellers here to give us a buy opportunity in this market. So let's be on standby to catch this one. You might want to screenshot my screen as well, so that you can use it as a reference point to guide your trading activity for today. So if you do have any questions, feel free to drop your inquiries in the comment section. I will be taking the next 10 seconds to read through the chat and see if there are any questions before we move on to the next option. All right, I see you. 9535126. Good morning, thank you. Nest57, good morning to you. Emma Star, good morning. All right, so in the absence of no questions, I want to assume that we're on the same page here. So we shall be moving on to the next option, which is the US Tech. Now on the US Tech, price action has been quite on the choppy side. As you can see, since the beginning of the week, we have seen our price action at consistently rejected or fall within a range between the 13,300 and the 13,230 since the beginning of the week, to further emphasize the level of indecision in this market. And whenever we have indecisions like this, it just gives us a clue into the level of indecision in the market, where majority are not sure what is going to be happening, and key players in the market probably withdraw their funds from the market, waiting for a major catalyst to give a well-informed decision of where to be heading. And if we look at the economic calendar for tomorrow, we have a couple of high impact events that majority are looking forward to. And one of the most important one is the consumer price index, which is an inflation indicator. Is a measure of price movement by the comparison between the retail prices of a representative shopping basket of goods and services. So it gives us the an insight into the inflation situation in the US economy. So it's one major event that majority are looking forward to, and this might likely be the reason why we have been seeing this old choppy situation since yesterday. And from the look of things, we had a couple of sell positions actually yesterday. Remember, we agreed here yesterday that if price action breaks down the support line, we are going to be selling at that point. And price actually did break down that structure, and we had a situation where price moved about 40 pips in our favor before we were taking out of that position by buying pressure. And I do hope you moved your stop loss to secure the position before price action took you out, as you will be having a worst case scenario day of about a break-even status on that one. Then right now we are going into the New York session today. What is going to be our plans here? So for me personally, after citing the multiple rejection of that 13,300 area, so we saw the retest of the 13,300 here on Friday last week. Then the same thing also happened during the New York session yesterday to give us a sign that sellers are very, very strong around that area. And one thing I saw here this morning after the retest of the structure here, we saw how price found it difficult to break the previous high, giving us a signal of a potential reversal pattern at this point. And you all know, whenever we cite the potential of a reversal pattern, the next thing we want to be doing is to identify the neckline of that structure, which will be serving as a platform upon which the validation of that reversal pattern will thrive. Now look at the situation here. We have the neckline sitting at exactly at the resistance line that we identified yesterday at the $13,265 area. So we saw the breakdown of the structure here. We saw the retest of structure, and price action since have been dropping to the downside. So as a result of this, I had a sell position triggered here, and for those who are taking advantage of this opportunity at that point, well done to you for being on standby, as you will currently be running with about 32 pips in profit at this point. So for those who are taking advantage of the breakdown of the 13,265, at this point you want to be moving your stop loss accordingly to lock in some profit, or even move it to break even, and let's see how this is going to be playing out. And for those who had missed out on this opportunity, well, it's okay. Let's see if the market will be giving us more opportunities to be part of this trend to the downside. And in fact, we still need some confirmations here to buttress the strength of the sellers in this market. We still need some further confirmation, and the reason why I have said this is because of what we saw here yesterday. We saw as soon as price broke down the structure, we saw how rapidly buyers came in to take price out of that structure, and it could still happen again. But for the fact that we had a breakdown of that level, it just gives us a clue that sellers still has the tendency of continuing to the downside. So as a result of this, we shall be looking forward to more opportunities at the breakdown retest of the structure at any point in time during the New York session to capture the trend continuation to the downside. And even if buy pressure resumes around this area, that is, if buy pressure resumes instead, we don't need to panic yet, as we could still see a situation where price will come back into the structure to retest it to incite another wave to the downside. So on the US tech for today, I'm still holding on to a bearish bias at this point and having this range as my yardstick for trading activity today. So as long as price action remains below the 13,265 area, which happens to be the neckline of that reversal pattern we identified earlier. So let me show you the reversal pattern one more time. So we have something like a double top structure here where price was unable to break out of the previous high. Then at this point we saw the breakdown to validate the reversal pattern here. So we might still see the price come back to retest the structure at any point in time. So you don't need to worry if buy pressure resumes around the 13,230. So let's still wait out for more selling opportunities in this market. So we are looking forward to price coming back into the structure to either retest it to give us more sell position, or we look out for a breakdown retest of the 13,230 level to join to add more position to our existing trade. So with the sell bias on the US tech today, we also need to consider the potentials of the buyers too as well. And considering the fact that price action has been bullish for the last couple of weeks in this market, we cannot ignore the potentials of the buyers as well. But for me personally, for me to buy the US tech for today, I would rather see price action take out the 13,300, which happens to be a resistant line for a very long time here. If we go to as far back as I think only 2 weeks ago, I guess, we saw how that level had been a strong selling niche in this market. So if a breakout of that structure happens, this will be a sign that we might be in for a bullish momentum. And one other thing about this structure is that I acknowledged earlier that we have a channel between the 13,300 and the 13,230. And if we take into consideration the impulsive move that brought us to this point, we might likely see this whole structure transition into a trend continuation pattern where a breakout of the 13,300 will be welcoming more opportunities to add more, to join the trend continuation to the upside. So above the 13,300 will be reasonable to be buying the US tech at this point. So without a breakout of the 13,300, I wouldn't be thinking of buying the US tech for today. So let's see how this plays out. And for the sell position, which I made mention that is more likely to happen, this is going to be if a breakdown of the 13,230 happens. This is going to likely be a retracement of the impulse leg. So we already have a TP target situated between the 13,120 and the $13,000 area to place our TP target for a sell-off if the breakdown retest of the 13,230 happens today. And the same area will turn out to be a reversal pattern if we start seeing buy pressure resume around that area to join a bullish momentum to the upside. So let's be on standby to catch this move when it finally happens. So these are my views here on the US tech for today. If you have any questions, feel free to let me know in the comment section. Norway 76, you are good morning, you are welcome on board. Glad to have you around. Trust you are doing well. All right, so in the absence of no questions, I will assume that we're on the same page here. So I will be moving on to the next instrument for today, which is the GBPUSD. So on the GBPUSD, this was where we were during the live session yesterday. We saw the breakout of that resistant line at the 1.26550 level prior to the end of the live session yesterday. And I told us all here that we shall remain patient, especially for those who had missed out on that opportunity. And for those who took advantage of that opportunity, I made mention that you should move your stop loss to secure that current position. So we were expecting price action to come back and retest the structure to incite another wave of bullish momentum. And as you can see here, that did not happen as price action dropped back into that range. So remember, at the beginning of the week, we identified a simple setup here where we had a channel where price action was ranging between the 1.26550 level and the 1.26250 area. And we said something here yesterday that simple setups like this, we have no choice than to wait for confirmations to happen, which will come in the form of a breakout or breakdown of that channel. And yesterday we saw price action break down this channel. Later during the New York session yesterday, we saw the breakdown of that structure. And remember what I said here yesterday. I said as soon as price gets into this trend line, we want to be moving our stop loss and watch out to see how price action reacts to that level, and that will determine if we are going to be adding more sell position to our existing trade or getting ready to join a bullish momentum if buy pressure resumes around that area. Now, if we look at what had happened in this market in the last 12 hours, you will see that we had a breakdown of both the key level at the 1.26250 and the trend line, and we saw how price action came back to retest the trend line here, which was immediately followed by an engulfing bearish candle to signal that sellers are still very strong in this market. So going into the New York session today, we are going to be having a bearish bias in this market, and to further emphasize the expectation of a bearish momentum and also feel comfortable in a sell position if we are in already, I was able to spot a trend line after connecting the series of lower highs since the beginning of this week. So with a trend line here, this will be serving as our yardstick for trading activity for today. So as long as price action remains below the trend line, we shall feel comfortable in our sell position, and at the same time look out for more opportunities to maximize this potentials of this bearish potential in this market. So with this situation we have here, we are good for a sell position right now, still looking for more opportunity. So if price action breaks down the 1.26080, we want to have another sell position trigger, and later on in the future we look out for retest of structures to add more position to our existing trade on this one. So as long as price remains below the trend line and the 1.26250 level, we look out for selling opportunities in this market. However, in as much as we're looking out for sell positions here, like you all know, we want to also keep tabs with the potential of buyers too in this market. So with the bullish momentum come in, excuse me there. Will a bullish momentum come in here? And if it does come in, what do we want to be seeing on this chart? That will give us the insight that we might be having a momentum shift at this point. Well, the first thing we are going to be doing is to use the trend line we just identified earlier as our yardstick. Like I said, if price action remains below the trend line, then we shall be feel comfortable in our sell position and look out for more opportunities to sell. But if at any point in time during the New York session today we see a situation where price breaks out of the trend line, then at this point we want to be seeing this as a signal that buyers are gradually coming to this market. And remember, we are not getting too excited at this juncture, as we still need some confirmation to happen before we want to open a position in this market. So we want to see price action do some retest of structure. So as soon as we have a breakout of that structure, we scale down to our lower time frame, like our 5, 10 or 15 minutes time frame, to look out for confirmation that will give us an insight into what our next line of action will be. So if a retest of structure happens followed by buying pressure, signs that sellers are finding it difficult to drop back below the 1.26250 level, then at this point we want to be in a buy position in this market. So what this simply will have happened is that a breakout of the resistance of the trend line and the 1.26250 level would have negated the strength of the sellers along that trend line. But at this point in time, I'm still holding on to a bearish bias. But if a bullish momentum happens in such a way that we have a breakout of the trend line, retest of that structure, we would have no choice than to be part of the bullish move to the upside. Now, in order to further support the bullish momentum, which is likely going to be happening in this market, is the demand zone here at the 1.20608 area here, which as you can see, since the early hours of today, we have been seeing how buyers have been negating the bearish attempt at that junction. So I will label this area the demand zone at this point, and what I will be doing here is to put this right inside the box there. So we have a white color, and then we have this dark area here. So we have a demand zone here. So as long as price remains above that structure, after the breakout of that level, we feel comfortable in that buy position in this market. So let's see how this plays out going forward. So above the 1.26250 area and the trend line will be an area where we're looking out for more buying opportunities in this market. But if price action breaks through this demand zone to the downside, we want to be adding more position to our current sell position in this market. So let's see how things plays out in the next couple of hours. So best of luck on the GBPUSD, everyone. If you have any questions, feel free to let me know in the comment section, and trust me, I'm willing to be of help in that regard. Okay, so let's move on to the next pair. I can see some comments here. Norway76 is asking what Ethereum is going to be like for today, and I see another one here. Latif Asel is asking for the Ripple. Okay, so let's see if we can incorporate this before the end of the session. So let's run through the instrument we have been monitoring since yesterday first of all. Then if we can finish that before time, then I will try to do some analysis on this instrument. So please stay tuned in. All right, so moving on now, the next pair we are going to be looking at is the XAUUSD. Now on the XAUUSD, it's been a very choppy situation here too as well. Like I said earlier, the week has started on a very lethargic start. As you can see, price action has been very slow in whatever direction it's moving, going up and down since the beginning of the week. And this is more or less as a result of the anticipation of the CPI event coming up tomorrow, as majority really want to see what the data will be, and this will give an insight into the economic situation of the US. But one thing we can see from this chart actually since the beginning of the week is the fact that price action has been bullish. And to emphasize this bullish structure here, we were able to connect the series of higher lows yesterday to give us this bullish trend line. And for those who had bought this at any point in time during the week here, well done to you for being on standby to catch that move. And you know what you want to be doing right now. You want to move your stop loss to secure the current buy position. However, for those who had not bought at any point, people like me, because I'm yet to have a trade right now, though we had a buy position yesterday, I think we had a buy position after the breakout of the 2025, which was something that we projected yesterday, and price action moved about 50 pips in our favor before the bearish momentum happened. So if you are taking advantage of that one, you must have moved your stop loss at one point, and price action would have taken you out of that position, probably at break even, worst case scenario. Now, one interesting thing has been happening in this market since yesterday evening during the later part of the New York session, which needs some level of attention in this market. Now, considering the fact that price action has been bearish since last week Friday, as we saw this crash happened following the NFP data that came in on Friday, we saw price crash back into that our key level, a key level which has been consistent with us in this community in the last couple of months. We saw this old bullish momentum happen, which for me, I'm considering it to be a retracement of that impulse leg where anything could actually happen, but there is a high chance that a trend continuation to the downside could happen from this current structure. And why have I said this? Now, if you zoom into the current structure here and look at what has been happening since the New York session yesterday, you would have observed that as soon as price action gets into that area around the $2,029.50 level and the $2,030 area, we have been seeing some level of selling pressure around that area. And what this simply means is that there is a concentration of sellers around that area, which has been negating all attempt by the buyers to break out of that structure. And if this whole situation continues like this, then we are likely going to be seeing a new reversal structure, which could come in the form of a double top structure, where the $2,020 area will be serving as the neckline of that reversal pattern. And the neckline of this reversal pattern, you all know that we need price action to break down the neckline of the structure to give us an opportunity to sell this market, where a further breakdown of the $2,015 area will be welcoming more selling opportunity at this point. So that is the only way we are going to be thinking of selling the XAUUSD today. And in fact, if a breakdown of this neckline at the $2,020 happens, price action also would have broken down that trend line that we identified earlier, which is serving as our yardstick for trading activity this week. Remember, this trend line has been supporting that bullish momentum. So if a breakdown of the structure happens, price would have also broke down the neckline of that potential reversal pattern we have here to incite that move to the downside. However, if price action continues to remain above the bullish trend line at this point, we'll have no choice than to hold on to a bullish bias in this market. And as a result of this, personally, I had a buy stop order above the $2,029.50 level just prior before the beginning of the session. And one thing about putting a buy stop order above the $2,029.50 level is that we want to be having a whole lot of room for price action to breed around this area. Now, the first thing here is that we have been citing selling pressure around this area. So there is a chance that we could have a breakout of that structure happen, then price action come back to retest structure by going to as far as coming back into the $2,025 level, where it shares a confluence with that bullish trend line to incite another wave of bullish momentum. So because of the expectation that price could still come back to as far as dropping back into the 2025 after the breakout of that level, we want to ensure that we have stop losses that covers this whole range. So if we are having a buy stop order above the $2,029.50 level, then our stop loss should be somewhere right around or below the trend line. So if you can afford a stop loss of about 65 to 70 pips in this market, then you could take advantage of that move right there. But if you cannot afford a stop loss of about 60 to 65 pips because of your portfolio size, then what you want to be doing here is to wait for price action to break out of the structure. Then you wait for some confirmation, like some price coming back to retest this level, giving us buy pressure. Then at this point we have a good confirmation to join that move to the upside. And in fact, if price action does not come back to as far as the trend line at the 2025 to retest it, but instead after the breakout of structure it only comes back into the 2029, the fact that we see buy pressure at the retest and see signs that sellers are finding it difficult to break back below the structure is a good sign for us to be part of a bullish move. So this is how we are going to be buying the XAUUSD today. So I've been able to give us a scenario of how to look out for buying opportunities here and how to take advantage of a bearish opportunity when it finally happens. So personally, like I told you earlier, I already have a buy position triggered at this point with my stop loss somewhere around below the 2025 level and that trend line to protect myself against protect my position, my portfolio against any further risk beyond my threshold. So that is that on the XAUUSD for today. You might want to screenshot my screen so that you can use it as a reference point when you're about to make your individual decision on the XAUUSD. If you have any questions, let me know right in the comment section, please. So with that being said, here we shall be moving on to the next pair. 4114, good morning to you, glad to have you around. Vincent, how are you doing today? Jaden KG, how are you doing, Jaden KG? Trust you are doing well. So moving on right now, we are going to be taking on the next instrument, which is the USDJPY, after which we can be looking at the cryptocurrencies that was mentioned earlier. So on the USDJPY, we really have not taken any position yet since the beginning of the week. As you can see here, price action has been in a choppy situation. So it has been a very slow start to the week on the USDJPY too as well. As you can see, our price action had been caught within a range between the 135.300 and the 134.700 area since the beginning of the week to further emphasize the level of indecision in this market. And like I said earlier, this is as a result of the anticipation of the high impact event coming up tomorrow, that is the CPI. So majority don't want to the market is more risk averse at this particular point in time. Everyone is playing it safe, so scalpers might want to be taking advantage of trading opportunities within that range, which is about, let's see how many pips is that, about 50-60 pips range about, which is not something comfortable for me anyways. I need price action to do a breakout of the structure to give me confirmations of where price action is likely going to go. And you all know, as usual, what we do whenever we have this kind of simple setup where price action is caught within such a range. We need price action to break out or break down that resistance or support line, whichever the case may be, to give us an opportunity to either buy or sell in this market. So with this whole situation here, I'm having a buy stop order above the 135.300 area so that I can catch that bullish move if the breakout of that structure happens today. Now, if the breakdown of the support line happens today, we are not having a sell stop order around this area. And the reason why we are not having a sell stop order in this case scenario is simply because of the momentum that started at the end of last week's trading session. So for me to sell the USDJPY today, I would rather wait for price action to break down, taking out all the buy positions within the demand zone we just identified here, just around the 134.700 and the 135.850 area, to give us a confirmation that sellers are gradually gaining some momentum. So I want to see the breakdown of that structure happen, then I wait for a retest of the structure where I begin to see signs that sellers are gradually gaining momentum. And in fact, we want to see signs that buyers are finding it difficult to climb back above the 135.850. So if this continued selling pressure happen on our lower time frame, we would have no other choice than to join a bearish momentum to the downside. Now, there's one more thing I would like to share with you on the USDJPY, which will also give you an insight into why we are making such a decision on the 1 hour time frame. Now, let's go a little above into the higher time frame here. Let's go to as far as the 4 hours time frame. And remember, this was what we saw at the beginning of the week, and this was the basis upon which our decision for the week was made. Now, what we saw on the 4 hours time frame was quite interesting. It acknowledged the fact that buyers are very strong in this market, at least since the last week of the month of April, the month of March. And to further emphasize the level of strength of the buyers in this market, we have this trend line here after connecting the series of higher lows. So we have a uniform trend line which has further emphasized the level of buying strength in this market. Now, in addition to this trend line is that demand zone we identified around the 133.500, a level which has been consistent since the mid-month of April. As we can see here, that every attempt by the sellers to break down the structure at every point in time has been rejected by the buyers. So we had a huge demand zone there, which has served as a platform for a continued bullish momentum in this market. And on Friday, we saw how price action was unable to find a lower low. As you can see, we have a higher low on Thursday last week. We saw the lowest point in the last couple of weeks at the 133.00 area. Price was unable to even get close to that level, and we had an higher low here, leading into a situation where price action is currently ranging along our key level for the week, sitting at the 135.00 area. Now, why did we have a key level at that point? Well, if we go far left and go to as far back as the mid-month of April, you will see how the 135.00 level had been a major determinant of price action in this market. Look at what happened here in the month of the month of April, stroke the last week of the month of April. We saw how the 135.00 area was a very strong selling niche where buyers found it difficult to break out of that structure. But fortunately for the buyers, during the last trading day of last month, we saw a final breakout of that level to insight and give us a clue into the level of strength of the buyers in this market. Though we had price action break down the structure last week, but immediately price action came back again into the structure, and since the beginning of the week you can see how price action has been ranging just exactly within that 135.00 area, which I said earlier has been a major determinant of price action. And in fact, that level is serving as our yardstick for trading activity this week. And you all know how we use the yardstick. As long as price action remains above the key level, we look out for buying opportunity. But if price action drops below the key level, we look out for selling opportunities. And with the situation of things right now, remember we have a demand zone which was duly identified on the 1 hour time frame just around the 134.740 area, where I said we need a breakdown of that structure to give us a sign that sellers are gradually gaining momentum here. So that is why we need a breakdown retest of that structure before we join that move to the downside. Then it now depends on how price action reacts to the trend line that we identified earlier, that will determine if we are going to be adding more sell position to our existing trade or get ready to buy. So let's keep this in mind, and let's be at alert when price action gets into the structure. You might as well use your price alert so that whenever price action gets into these levels that we've identified here, you will be notified in real time. So these are my views here on the USDJPY. I'm still expecting a bullish momentum here actually, and I told you I have a buy stop order above the 135.300 area, where the buy a takeout of this sell positions here will give me a very good sign to be part of a bullish move. And I told you how we are going to be selling, and only if price action breaks down and retest that structure. Please note that word I said here, breakdown and retest of that structure, before we are going to be joining a sell position at this point. So these are my views here on the USDJPY. If you have any questions regarding what I just explained so far, feel free to drop your enquiries in the comment section. So while I continue to watch the comment section for questions and illustrations, let me quickly run through Norway 76 Ethereum. Let's see what Ethereum is doing right now. If Norway is still in the house, let me know. And if Latifa Sahil is around, let me know. Then I will be treating the ripple before we draw the curtain for today. Jaden KG, welcome. Jeremy 45, you're welcome. Vincent, how are you doing? So let's quickly run through. Okay, Norway 76 is here, so glad that you are around. So let's run through the Ethereum together and see what is really going on this chart, and how we intend to position ourselves ahead of the New York session today. So the first thing we are going to be doing here is to run through the daily time frame, as we want to have an holistic view of what is really going on in this market. Now, if we take into consideration what has been happening since the beginning of this year, using our line chart, you will see that price action has actually been on a bullish note. So if we connect the series of higher lows in this market, definitely you can see that we have a bullish trend line, which we can be using to guide this current structure that we have on the screen. Now, if we go back into this whole area here and take into consideration what has been happening since the month of April, you will see that we have a key level to work with at around the 1,800 level. Let me show you here in a moment. So since the month of March, this level has been a major determinant of price action. So let's map that out first, and I will be sharing with you why this level is so important based on this current structure. So let's label this area for the sake of clarity. So we have the 1,800 level mapped out. Now you can as well map this out on your chart as you go along with me here. So let's place this at the right hand side of our screen. So now look at this structure here. You would have noticed that since the month of March, this level had been a major determinant of price action, As you can see, throughout the month of March, this level was a very strong selling niche, as it was negating all attempt by the buyers to break out of that structure. Then after the breakout of that structure happened during the first week of the month of April, since then we can see how buyers had continued to negate all attempt by the sellers to bring price back below that level. So at this point, the 1,800 level is serving as two things for us in this market. The first one is it's serving as a key level, and secondly, it has been a very strong demand zone in the last 1 month. So what I will be doing here is to acknowledge the fact that it's a demand zone. So let's map out and call it our demand zone, at least in the meantime. As long as price remain above that structure, it's still going to be serving as our demand zone. So let's label it our demand zone. So I normally like my demand zone to be written inside, so we place it inside the box, and then we have this given a darker color, which is how I like my demand zone to be. So here we are now, we have a demand zone, and since the beginning of this month, as you can see here, price had continued to trade above the 1,800. So now common sense will tell us now that if we are going to be trading the Ethereum, we want to be looking out for buying opportunities at this point in time. The only thing that will make us to sell here is for price action to take out the 1,800, take out all the positions, all the buy positions there. If that happens, then this will be a signal that we might be going bearish. But remember, we are not going to be getting too excited at that point, as we still need some confirmation to happen, as the breakdown could turn out to be a false breakdown actually. So for us to confirm that the breakdown is truly a valid and eligible breakdown, then we want to scale down to our lower time frame to look out for structures like a retest of structure, giving us signs that buyers are finding it difficult to climb back above the 1,800. Then we want to be in to join a bearish move to the downside, and depending on how price action reacts to this trend line will now determine if we are going to be selling, adding more sell position, or if we have buy pressure resume again, then price action is likely going to be respecting the trend line one more time to incite another wave to the upside. So you can see how important the 1,800 is right now. So as long as price action remains above the 1,800, we continue to look out for buying opportunity. Now, to further capture and take advantage of a move today, we want to scale down to a much more lower time frame to understand how participants in this market has been reacting to the structure since the beginning of this week. Now, to do that, let's go down into the 4 hours time frame first of all and see what is happening there. So we can see here that during the later part of yesterday, we saw some sharp rejection of that structure. So we are still going to go further down. So I want us to have this key level very visible on our lower time frame when we get into the lower time frame there. Okay, so let's go to the 1 hour time frame first, and if we can find something to look forward to, then we scale down to a much more lower time frame. So right now we are on the 1 hour time frame, and I think we're beginning to see something to use to guide our trading activity for today. So what I will be doing right now is to bring out my line chart and then connect the series of lower highs, which is quite obvious that price action has been bearish since Saturday, and we shall be using this trend line as our yardstick for trading activity today. Now, coupled with the trend line, we want to have a level that will serve as a yardstick for today's trading activity, and that falls exactly along the $1,850 area, which is right here. So hold on a second, let's label this one out. So we have the $1,850 level here. So let's place this at the top right hand side of the level, and then we reduce the size of the font, and then here we go. So going into the New York session today, we already have a key level. You can see how the 1,850 has been a major determinant of price action since the beginning of this week that we are in. We saw how that level was a demand zone at first, we saw the breakdown of that structure back into the demand zone we identified on the daily time frame, and since then we have been seeing selling pressure around this area. And then we're at a very critical confluence right now where price action shares a confluence with the trend line that have been supporting the bearish momentum throughout the course of the weekend. Now, for us to buy at this point, and you know the reason why we are going to be buying, I told you on the higher time frame we are sitting on a very strong demand zone, and not unless price breaks down the structure, we'll hold on to a bullish bias as long as price action remains above the 1,800. Now, to buy the Ethereum today, I want to see price action do a breakout retest of the 1,850 level to take advantage of a bullish momentum. And if a breakout of the $1,850 happens, as you can see, price action would have taken out that trend line. Then at that point, it will be a sign that the trend line may no longer have the capacity to reject the bullish momentum anymore. And if that happens, if we are lucky enough, price action does retest of that structure, we want to be adding more position to our existing trade. And personally, based on the contraction we have in this market, if we compare the impulsive move from the trend line, look at the first one here. Can you see the first one here? If we compare it with the second impulse leg, you can see that it is reducing gradually. So this is the second impulse leg, and then if you compare it to the third one, you can see that it has reduced drastically, which is a sign that sellers are gradually losing momentum in this market. So if a breakout of this trend line happen at any point in time, it's likely going to be a massive move to the upside. So I would rather advise that you have a buy stop order anywhere above the 1,850, just right above the trend line, anywhere above that area to capture that move to the upside. Then if at any point in time we are lucky enough, price action comes back to do some couple of retest of structure with buy pressure, with signs that price action cannot break down the 1,850, then we want to be adding more position to our existing trade. So this is what we shall be looking forward to on the Ethereum today. So I hope you be on standby to catch this move for any buy opportunity in this market. And like I told you on the higher time frame, for us to sell the Ethereum today, we want to see price action break down the 1,800. We look out for a retest of structure which might also line up with a trend line. Then at this point we want to be part of a sell move to the downside. So you can see how the 1,800 level is being a major determinant of price action for today. So let's keep this in mind and use this level to our own advantage. So that is that on the Ethereum for today. I hope Norway 76 is still around. If you are still around, let me know in the comment section if you have any questions regarding what I just explained, so that I can shed more light in any area you think you need me to do so. So that is that on the Ethereum today, and I think on this note I would like to call it a day here. All right, you are welcome, Norway 76. So on this note, I would like to call it a day here. So let's keep our mind open on all the positions we have. We've had structures identified. Let's ensure that our key structures mature before our setups mature before we take advantage of any move. And remember that we have an high impact event. A high impact event coming up tomorrow, that is the CPI, and that is why we have been seeing a slow start to the week. Price action has been caught within a very choppy situation, and in this kind of market environment, the tendency of compulsive trading is very, very high. So that is why we have mapped out structures. So let's wait for the structures to mature before we want to be taking advantage of any move. I hope this is well understood. And remember also, we identified some speeches coming up today. We have the Jefferson speech coming up in about 1 hour 20 minutes from now, and then we have the Williams speech coming up in about 5 hours from now too as well. So these are high impact, these are medium impact events. So prior to those events and during and after those events, there is likelihood that we could see some spike in price movement. So let's ensure that we are in the market. If we have an open position, let's move our stop loss, secure the current position, and let's see how price action plays out. So on this note, I want to call it a day. I wish you best of luck during the New York session today, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to get prepared for the CPI event tomorrow, and as well review the pairs that we have been monitoring so far and see how well they are doing. Do have a wonderful day, everyone. Bye bye.